Money day, guys and girls. Hope you lot are blessed. Now, look, this week is going to be an action-packed week. We've got a lot of fundamental news taking place, a lot of high-impact news. This means the markets are going to move crazy. If they don't move crazy, then it simply means that unfortunately the markets are waiting for the news to be released. So leading up to the news that's going to be taking place, the markets could be slow, but we're hoping to catch some nice juicy setups. So if you're watching this video right now, it's a great time. Okay, you can get in, you can have a look, you can see how the markets are going to react, and you can also understand why I'm focusing on these pairs. Now, we've got the euro, we've got the dollar. Those are what's going to be in focus this week. So let's have a look and enjoy the show. Okay, so the first thing we're going to do is have a look at the economical calendar. We can see on Tuesday, which is today, we've got the PMI for the dollar. We've also then, as we progress into Wednesday, where things get a bit more interesting, we've got the ADP. Now, for those of you who don't know, the first Friday of each month, okay, of the first week, the first full week, you will get NFP, which takes place on Friday. Okay, down here, you can see NFP on Friday, right? But prior to NFP, you'll always get the ADP, which is a non-farm employment change. So this will be quite important because it will kind of give you a brief idea on what the NFP result's going to be. So we'll look out for that on Wednesday. And we've also got the Bank of Canada interest rate. This is going to be really important. They're looking to keep the rate the same, the interest rate, but at the same time, the Bank of Canada is in a lot of debt. So it's going to be quite interesting to see what happens with the interest rate. And of course, whatever new news articles that I can read, I'll be sure to inform you guys, because we definitely want to know what the Bank of Canada has to say. Usually when there's an interest rate, they usually have a speech. So I'll be sure to look for that and see if I can find it. Now, we've got the Federal Reserve, Jerome Powell speaking. Now, when he speaks, he's going to be talking about the ongoing concerns of inflation. He's going to be talking about the unemployment rate, most likely, because, of course, we've got the unemployment rate on Friday. We're also in an election year, so it's going to be very important to hear what Jerome Powell says. And then we've got the crude oil inventories. Now, this will affect the markets alongside with the Bank of Canada, as they are they have some of the largest oil companies. Usually oil is pegged, so if you check USD CAD, it's usually pegged with the movement of oil. So it'll be very interesting to see the results on Wednesday. But Thursday, oof, that's when we lick our lips, man. Thursday, we've got the President Lagarde. She'll have a speech, okay, which is here at 1:45. But we've also got the interest rate. The interest rate is going to remain the same. They said for some time that they do want to keep the rate the same, just like with the US. However, President Lagarde said they weren't looking to change the rate. Now, even though they've said they're not looking to change the interest rate, what's really important is that although they say things, they don't always follow through with what they say. So we're going to keep an eye out for this. And of course, what we're going to be focused on when we go over the charts is mainly Euro and USD pairs. Now, we've got jobless claims, which is going to be very important. We also then look towards Jerome Powell speaking again. And of course, because NFP is on Friday, the unemployment rate's on Friday, it's most likely he's going to talk about the unemployment rate and inflation. And then as we go into Friday, we've got NFP, unemployment rate at 130. So if the markets aren't really looking too juicy come Wednesday, Thursday and Friday is definitely when we'll see the markets making some moves. Now, with that being said, I had an article here which I read upon, and this was about the US. It said June is now seen as the likely starting point for the Fed's rate cutting cycle, with traders seeing around 75 basis points of easing this year. So towards the latter end of the year or halfway through the year, we can expect to see interest rates reduced. If they do start to cut rates, then of course, this is going to have a significant impact on the other central banks as well. Now, as I scroll down, I wanted also to tell you guys here, it says the European Central Bank meets next week, and while no policy change is expected, the bank could hint at rate cuts later in the year. As I told you, President Lagarde has said they would keep rates the same, but they could potentially hint that they would start cutting rates also. Now, inflation is retreating in the UK, but remains at a higher level than in Europe and US. This is really important, guys, because although they may want to keep the rate the same, because their rates are so high, they probably will look at cutting the rates too. So when we have a look at the charts here, we're going to have a look at the 10-year bonds. The 10-year bonds don't really give us any type of indication to whether it could go up or down, because we are inside a range, and we've been inside this range pretty much since the beginning of time. So with that being said, I'm going to move very swiftly down to the 10-year bond yields. Now, for those of you who don't know, the bond yields are inverse to the bonds. So if the treasury bonds go up, then the treasury bond yield should come down. But more importantly, if we can't get a good reading on the bonds, then of course the yields, if we can get a reading, gives us a direction on where the bonds will go. They're inversely correlated. Okay, now we've got these key structure levels here, which I've highlighted, and we can see here that actually we've been in a very bullish cycle, for the past 4 years since 2020. So although price has pulled down, we can't ignore the fact that we didn't close beneath this level here of structure or the ones lower. So what we can actually look at this like is just a pullback. Okay, if we go on the charts here, we can see on the monthly here, we can see we've had a higher high, higher low, higher high, and this could potentially be a higher low if price pushes up to make a new higher high. Now we are sitting inside of the structure level, a significant structure level. However, because we've got so much news taking place throughout the week, it's most likely that we won't see any real moves until we approach the latter end of the week. Okay, but with that being said, okay, I am looking at this as the higher high, which it is, and I'm quite optimistic on the yields pushing higher. So if that does happen, that would of course support the bonds coming down lower. Now, what you may or may not know about the bond market is that the currency market follows the bonds. So if the bonds push down lower, then the dollar's going to follow it. Okay, if the US bonds come down, the DXY will come down with it. Now, when we look at the DXY, we can see that yes, we've been inside a range for some time, but at the same time, it does look like we could push down lower. We played into this candle here, and price does now look like it's coming down. So we do have to see what happens throughout the remainder of the week. But what's really interesting is gold. Gold has really pushed over the past 2 weeks. We're near the all-time high. We're currently at $2,115 an ounce. This is incredible. Why? Because very simply, guys, what this signifies to us is that when economies become uncertain, commodities do very well. So right now, what we're seeing here is that investors are simply saying to us that they're putting their money into these safe havens like commodities, and they're actually trying to stay away from riskier assets. So because of that, we're seeing the strength here. We've also seen the crypto market's been on an insane bull run, but that just signifies that the wealth is being shifted from the riskier assets into the safe haven assets. But at the same time, guys, we're also seeing the stock market at an all-time high as well. So there's a lot of manipulation taking place at the moment. You know, the Fed is still pumping the Fed is still pumping money into the markets, which essentially is showing the diversion. Okay, so unless gold can come down to 2052, which is a significant level of structure, I'd stay away from it. I wouldn't buy it, I wouldn't sell it. I would just simply wait to see what happens. Now, with that being said, I'm going to look at the USD JPY. Now, the yen has traditionally, traditionally, the yen has always predominantly had a very stable interest rate. Okay, from 1995 on to around about 2015, it was 0.5%. Okay, they then moved it up. They then went into a deflation period where the interest rate for the yen was minus 0.10, which would mean that you would have to pay to keep money into the banks, right? So because the yen has for some time had a deflation problem, this has always been a reason why investors are very wary of simply betting on the yen. Okay, what they simply do is they move their money around to where they can get better interest. And you got to think, if you've got something like the US giving you 10% interest, and you've got something like the yen giving you a minus interest rate, meaning you're having to pay to keep your money in there, what would you do? You'd move your money over to where you're getting the best value for your money, right? So what's quite interesting here is we're seeing this on the charts. We're seeing that the US dollar is pumping at the moment. And of course, we are about to approach a 34-year high, ladies and gentlemen. We was there back in November last year, and price pushed down lower. And now, of course, and that was the higher low, the higher high. Price came down. It's now made what's potentially a higher low, which could now push up to signify a higher high, because we haven't, of course, had a low taken out. Now, because I'm quite bearish, I've got a bearish outlook on the dollar, right? That wouldn't support USD JPY pushing up. That would actually support USD JPY coming down. So it's quite interesting to see that the UJ, okay, is very bullish right now. But when we have a look at the DXY, when we have a look at the bond market, you know, we don't have much optimism to believe that prices could push up. But guys, like I told you, we've got an action-packed week. We've got NFP taking place. We've got unemployment rate. We've got jobless claims. We've got all these high-impact news taking place this week, which could really shift, and it could really pump the dollar. The dollar could take out the highs here. We've got liquidity around the 107 handle. We could see the liquidity areas grab before price comes down. So why I say that is because when we look at USD JPY, we could see the same thing. We could see this 34-year high taken out, liquidity grabbed, and then price could come down. So I'm going to be keeping you guys informed and up to date as, of course, and when I see. Now, AUD USD, okay, it's really interesting because I'm very bearish on AUD USD. Okay, right now the Aussie is in a bit of a bad place, and you know the dollar. Quite simply, it's just taking control right now. The dollar is the major currency. If the dollar, of course, is strong, AUD USD is going to come down. Right now, what we can see here is that we did have a really good pullback from here to here. If I show you guys this pullback from this high to this low, what we saw happen here is price came up around at 88%, it wicked it, and then it pushed down lower. So what that would show us is that the first area that we'd be looking to take profit would be round about here, round about the 0.61 handle. Now I'm going to go down onto the daily charts, and the daily charts I'm going to show you something similar. I'm going to show you a swing we had, this swing high to swing low. Price pushed up, it wicked the 79%. For those of you who don't know, that is what I call the G spot. And price does look like it could continue pushing down lower, which would be towards the minus 14%. That would be my first area. Unless price pushes back up, then I'm not really looking to take this trade. Of course, like I told you, there's so much news taking place throughout the week that we probably may have to wait a couple of days before we can get a decent trade. So I'm going to keep you guys informed with that. With GBP USD, I'm going to stay away from GU for the moment, just simply because I feel like right now, because there's news taking place, we need to see what the Fed's going to do before we can kind of anticipate too much on what's happening here. Ultimately, if we go on the line graph, what we can see is that price did do a sufficient pullback, but we did also break the structure from being bullish. So because we broke that structure, right now it's kind of crucial. If I go onto the weekly, because we're on the monthly, if I go onto the weekly, we can see we broke the structure, we became bearish, price pushed up. It's just about pushed above this lower high, which would mean that it's broken the bearish structure and now turned bullish. And because of that, we just need to wait and see what happens here, guys. If price does break this high, I'm expecting a pullback. And on that retracement is when we'd be looking to go long. So there isn't a move as of yet. If we look here, we can see we've seen so many wicks that really price has shown us that we haven't really gone anywhere. It's been really indecisive. But we are, of course, now in an area where price could push up, grab this liquidity above. But again, we have to be patient, guys, and hold the line. What I'm really focusing on right now is the euro, because we've got the European interest rate this week and we've got a lot of US data to be released. So what's quite interesting here from the euro is we did have this swing high to low, okay, and price reacted from an institutional level as well as in between the 79 and that 70%. It even wicked, okay, it wicked the 79. It didn't quite reach 88, but if I adjust, well, I'm not going to adjust this, actually, I'm on the weekly, so I'm going to leave the fib how it is, but we can see we did wick this 79% area, which I call that G spot. Price came down. The blue lines represent significant levels of structure. The green ones represent my institutional zones. So we've actually wicked a significant level of structure and price is pushing back up. Now, if price can push back up in towards the 62 area, this is where I would consider selling from, guys. Unless we get up there, then I will not be looking to take a trade. Of course, we can see that we've had some really positive reactions here, but again, because we've got the European interest rate taking place on Thursday, that's when we're probably going to see how the markets really want to pan out. Now, with that being said, I am going to show you guys Euro JPY. Now, Euro JPY, another really interesting pair. We've got a key area around a 167 handle. If I go on the monthly chart to show you guys, the monthly chart, we're very, very bullish. Okay, we've got a candle at the top here, so I am waiting for price to kind of reach around the 165 area. But look, man, this is bullish. Okay, this is bullish. On every angle, this is bullish. If we go on the quarterly charts, we can see we're still bullish. Of course, the question is, where did we lose the strength? You know, is the euro going to continue pushing higher? If the interest rate remains the same and Lagarde's speech is positive, then there's more reason for us to be optimistic with the euro. But at the same time, guys, we can't ignore the fact that the yen is definitely going to be on the rise. They are on the verge of going positive with their interest rates. If they do turn their interest rates positive, then that will change the scale massively. Okay, since 2019, Euro JPY has been bullish. Okay, most pairs, I showed you guys USD JPY. Now this is Euro JPY. Both pairs have been very bullish over the past 4 or 5 years. So it's to be anticipated that the yen can gain some strength, can gain some momentum when they decide to turn around with their interest rates. And then, of course, we could see a massive bear run. So I'm going to keep you guys informed and up to date when it comes to these guys. I'm going to show you Euro AUD. Euro AUD, it's been bullish. Okay, it's been on a hell of a run, if I'm honest with you. It's been bullish. We can see here, if I just show you guys, we've had a bullish structure on the line graph here. Price has not taken out this higher low. Okay, so because it hasn't taken out the higher low, we are still bullish. With that being said, okay, we didn't get a higher high. So because we didn't get a higher high, we had to be very mindful, because that was the indication that price was changing its direction. So in actual fact, we started to get a low here. We got a lower high and then we got a lower low. So price right now could just be pulling back inside of this area before it decides to push down lower. But again, the interest rate on Thursday is going to reveal all, ladies and gentlemen. So we're not yet making a move. We're not ready to make a move. If I go on a 4-hour chart and show you guys, we're not yet ready to make a move. What we have seen with Euro AUD is some really nice moves, some really clean moves out of this area. We caught one over here, we caught one over here, and we caught a ton of moves over here. If I go on the 4-hour, we caught a range of moves right in here at the 62%. So it's been a blast whilst it's lasted, but there's no reason now for us to continue to think that price is going to keep reacting from the same area. So we have to pay close attention. Price has wicked the 79%, but we are currently on a little bull run, so we do have to see what happens. Now, those are going to be all the pairs. I'm going to leave you guys with AUD JPY. Now, AUD JPY is a pair that I think in 2021 or 2020, okay, I had a look at this pair before price actually reached this area, and I said if price could react off the 88%, we could be in one hell of a move. Now, price did wick the 88%, and at the moment it is pushing to the upper room. Shout out Ned. And price is heading towards, you know, the liquidity areas above 107. 107, this blue line is a significant level of structure, so I'd be very optimistic to see and to hope for price to reach that area. But we can't ignore the fact that we are sitting inside of a candle right now, so we're not going to ignore that price has, of course, slowed down. I'm going to remove this. Price has slowed down, and of course, you know, price could turn around because we've got a lot of key candles in this area, so we could see a significant change. But I've told you guys already, the yen has been very weak. Look, this is since 2020. I've shown you USD JPY, Euro JPY, and AUD JPY, and they've all been on a bull run since 2020. So it's to be expected that when the yen decides to increase its interest rates, because it's not going to be reducing them, but when it decides to increase the interest rates, it will change the scale massively. So I want you guys to understand that right now, The markets aren't showing us any real moves off of a higher time frame, but I will be looking at these on a much more smaller time scale. And that's the reason why you guys need to be inside my Telegram. If you're inside my Telegram, I'm going to be providing you guys with education. I'm going to be providing you guys with trades, live trades and education. And in actual fact, what I'll be doing for you guys is giving you all of this information for free. All you need to do is head into my Telegram, click on the link inside the Telegram so you can message my team. Either myself or my team will assist you guys, and we will get you guys sorted. Do not miss out on the trades this week, guys. It's going to be a showdown, a blockbuster. So with that being said, if you found this video valuable, I really would appreciate you guys to smash the like button. Drop a comment below. Let me know if you're trading the euro or the dollar this week. Let me know your thoughts on the yen. Let me know if you found this video valuable, and if you have any questions, or if you've got any ideas that you'd like for me to cover, I'll be sure to cover them next time. So with that being said, guys, trade carefully, and always remember that every day is money day.